here we go, yeah. At the top of the class on a roll, hey. And it's time to run it up, yeah, you know, yeah. Mashed out, put the pedal to the floor, yeah. On a roll, here we go, here we go.
What's going on, everybody? Welcome back to the channel. And in today's video, we're gonna be talking about the dreaded death cross. But before we get into it, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these great videos or urgent market updates that we upload to the channel. Now, what is the death cross? You may have heard people talk about this before, whether it's on crypto YouTube or Twitter or whatever crypto resources you follow. You've probably heard at one point or another about the death cross. Now, what the death cross is a signal that pops up on the charts that shows a lot of weakness in the market and typically indicates a lot of downside. But it's not always indicative of massive downside. Sometimes it could just indicate a little more downside before hitting a bottom. The death cross consists of two moving averages crossing each other. You have the 50 period moving average and the 200 period moving average. When you have the 50 period moving average crossing below the 200 period moving average, that is considered a death cross. This typically shows up on the daily chart, but we are getting one on the 3-day chart. So let's jump into the charts. I'm gonna let you guys know how you can get these moving averages onto your TradingView account, and we're gonna go ahead and back test the previous death crosses that we've had on the 3-day chart and try to use that information to figure out how price will react to this current death cross. Let's get into it. So we're here on the 3-day chart, and you can see I have two moving averages here. You'll see the 200 moving average in blue, and then right here we have the 50 moving average in orange. Now you can see right here I have it circled in gold right here. We do have a death cross. Now this is confirmed, so this is a confirmed death cross. And a lot of people are panicking. You know, they're saying, oh my God, this is death cross on the 3-day. We're gonna dump. And although that might be the case, we're actually going to back test these death crosses and see what has happened in the past and what this could indicate for this current price action that we're seeing right now. So first, I'm gonna go ahead and show you how to get these moving averages on your chart in case you, in case you don't have them. All you have to do is come up to your indicators tab here and click there, click on that indicators button right here, and you just wanna type in moving average, right? If you type in moving, it pops up right here. You don't want the MACD or an exponential moving average. You just want the moving average, just plain old moving average. You're gonna wanna click that twice, because we're gonna wanna put two moving averages on the chart, obviously. And then you come over here, you see you have two moving averages added. You're gonna wanna double click on these boxes or click this settings wheel right here, and it pulls up your settings, and you're gonna wanna go to inputs on the left-hand side at the top of this settings box right here, and you wanna come to length, and you're gonna wanna change this to 50. And then we're gonna go over to style, and we'll make this one orange just so we can tell the difference. And then maybe we'll make the line a little bit bigger so they're easier to see. And then you're gonna wanna do, click on the other moving average, except this one, you're gonna wanna change the length right here to about 200, or not about 200, but you wanna change it to 200 exactly. And then go to style. We'll keep this one blue, but we'll just make the line a little thicker. And then we'll click OK. So now you have the moving averages on your chart, and you should be able to see this death cross right here. Again, we're on the 3-day chart. Now, let's go back in time and see what has happened the last times we've gotten these death crosses. So if we come all the way back here to 2014, you'll notice we had a death cross right here. Now, we topped out quite a bit before we got this death cross, right? So we peaked out at the top of this cycle here at about $1,100, and then obviously came down a lot, and then got the death cross here on the 3-day. Let's just kind of dissect this and see what happened right after we got this death cross. So if we go ahead and grab our ruler tool and we come up to our death cross right here, I'm gonna go to the right of it because I'd like to measure from where it was confirmed. So we're gonna come right here, right where the death cross happened, and we're going to go ahead and measure from the top of this candle all the way to the actual bottom of the bear market, right? So that would be this wick right here was about the bottom of the bear market, and I'm actually gonna go ahead and try to get this day to the exact, try to get it to the exact day here. So you came down about 53 or 54% from the current price action at the moment of the death cross, right? So you had the death cross here, we came down to the top of the candle right as we crossed, and then we measured from there to the bottom. So we came down about another 50%. It took about 3 weeks. So very, very interesting. A 50% drop over the period of about 3 weeks. And then if we come over to 2017, right about here, you'll see that we had another death cross right here where you have the 50 period moving average crossing below the 200 period moving average, right? I stated that before. So that's what you're looking for. You're looking for the 50 period moving average to be moving below the 200 period moving average. And that's your death cross, right? So at the moment of this death cross, again, we're gonna go to the right of the cross because we wanna go from where it was confirmed, because back here, it wasn't even really crossing. And then right there, it crossed and confirmed right about at the top of this candle. And then we're gonna come down and we'll measure to the bottom of the bear market, which happened to be about another 45%. So in the previous cycle, we came down about 50% or so in about 20 days. And then in the next cycle in 2018, we came down about 45%, give or take, and we bottomed out in about 27 days, right? So similar time frame, similar percentage drop, right? In the 2018 drop, we came down a little bit less, only coming down about 45% rather than 55%. And so let's go ahead and kind of extrapolate this data and move it on top of the current price action to see what we could kind of expect if we see history repeat itself, right? So we'll say between 55% and 45%, we'll say about a 40% drop, right? Now, these death crosses on the 3-day are a little bit different than when they pop up on the daily, because on the 3-day chart, when these death crosses pop up, they don't pop up at the beginning of the bear market. It's not like we're getting these crosses up here and then Bitcoin goes to the floor. Rather, this is actually, these death crosses on the 3-day happen closer to the bottom. They're actually a better indicator that you're getting close to the bottom than they are to indicate an incoming bear market, right? Because we've actually, in the 2018 bear market, I mean, we had been in the bear market for quite some time here. Before getting the death cross, this was marking almost the bottom. It marked that last capitulation down and then the accumulation phase, which I think is something important to remember, that I think a lot of people think that once we bottom out in this cycle, we're just going to launch back up to new all-time highs. That is typically not how it happens. This is the same thing in 2013, 2014 as it is in 2017, 2018. You'll see we had that death cross, last capitulation, and then from the bottom to, when we started getting that 2019, fake out rally, there was still an accumulation period of about 107 days before you started to see more upside. So we are likely to see another accumulation phase like that when we get to the bottom. There probably will be a lot of sideways action before we start to recover and actually come up and make some new highs. So when we come to our current price action, you'll see that we actually have a confirmed death cross here. And let's go ahead and measure this house out like we did on the previous cycles. So if we come to the cross, and we're gonna come a little to the right of the cross because we want to make sure that it was confirmed from where we're measuring from. And if you go from the top of this candle, now, as you guys know, when we just looked at those in 2013, 2014, we dropped about 50 to 55%. And then in the previous cycle, 2017, 2018, we dropped about 45%. So let's say in this cycle, we would drop about 40 to 45%. And let's see what kind of numbers we can get and see if any of them ring a bell or are any of these numbers are actually interesting. So if we were to come down another 40%, it would bring us right around that $18,000 level. Now, you guys, if you watch the channel, you'll know that I'm a believer that we're probably gonna bottom out sometime here pretty soon in the mid to low 20s. I do think that, $25,000 to $20,000 area could be where we wind up bottoming out for this cycle. But that $18,000 mark, maybe we get a panic wick all the way down there. So not the weirdest number. It kind of makes sense for 40% to bring us down there. I see some people on YouTube that like to measure the moves from the actual cross of the moving averages. Now, I don't know why you would do that, but just for fun, if we go ahead and do that from about $40,000 and bring us down about 45%, something very interesting happens. it brings us to right about $22,000, which would be perfectly in line with our mid to low 20 prediction. So that number makes a lot of sense to me. If we come down 40%, that would bring us to about 24,000, which also makes sense. Mid to low 20s, 24K being mid 20s, 22K being low 20s. Now, if you come down a full 50%, that brings you to almost $20,000 even, which obviously is the peak of our last cycle in 2017, about $20,000 exactly. So those numbers are pretty interesting in my opinion. Again, I don't really know. I see a lot of people measure from the actual cross of the moving averages. Now, I would want to measure that from where the price action was when the cross happened. So I would rather measure it from where the price is to, you know, whatever that percentage drop is. I don't know why you would measure it from here, but nonetheless, those are pretty interesting numbers. It brings you right to those mid to low 20s. Now, if we come down 50% from the current price, that would bring us right to about another interesting number that we talk about on this channel, which is the $14,000 range. Now, again, I am a believer that we probably would bottom out between the mid to low 20s, but if we were to break those low 20s, there's a lot of confluence pointing towards this $14,000 area. Whether you measure it from the cross of the actual moving averages, and again, I don't really know why you would do that, but it is interesting when you do measure from there, you get a lot of interesting numbers, basically our price targets for the bottom of the bear market. And then when you measure from the price, you get those worst case scenarios where we break the low 20s and we come down closer to the $14,000 level. So either way you measure it, we are getting very, very interesting numbers when you extrapolate the percentages from the previous cycles. Now, you guys know, as we just went over in the previous cycles, the time to the bottom from these death crosses tend to be about 3 to 4 weeks. So if we were going to see max pain and really come down from this price another, you know, say 50%. Now, I don't know if we'll come down that low without a black swan event, but if that were to happen, if we take that time of 3 to 4 weeks, it is looking like we could bottom out by the end of June, which is next month. Now, if you guys watch the channel, I have been saying that I think we could hit a bottom in the next 1 to 3 months. I think that is a reasonable time frame for us to actually hit a bottom here in the next 1 to 2 months, maybe 3 months. So it is interesting when you extrapolate this data, you know, being that we had the distance between the death cross and the bottom in the previous cycles being about 3 to 4 weeks, that would bring us to about the end of June. We might be getting really close to a bottom. Now, I want to be clear. Again, this doesn't mean that we're gonna bottom out in June and then rip up to new all-time highs, 100K, whatever you're hoping for, but it is more likely that we bottom out at the end of June and then have a really long, boring accumulation phase before slowly grinding our way back up in the next bull cycle. Now, if you go back to 2013, 2014, the accumulation phase was actually a lot longer, coming in at about 250 days. So between that 107 and 250 day accumulation period is somewhere between those numbers is where I would expect this accumulation phase to run. So maybe we see something between at least 100 days of accumulation, if not a little bit more. But I do think that this death cross could be on its way to letting us know that we are actually approaching the bottom, and it could be closer than we thought. So guys, I think that's all I got for this one. I know a lot of people are talking about these death crosses happening, you know, recently. So I did just want to make a quick video and cover it for you guys. So just a quick little recap. It's the 50 period moving average and the 200 period moving average on the 3-day chart is where this death cross is happening. Although typically you will see these pop up on the daily chart, and they do signal a little differently on the daily chart than they do the 3-day chart. They happen much less often on the 3-day chart, and when you look at them on the 3-day chart, they are more indicative of approaching or getting close to a bottom rather than indicating another massive dump. They do indicate that we're closer to the bottom rather than indicating the beginning of a bear market. So let me know what you guys think in the comments. Are we going to approach a bottom at the end of June? Will this death cross predict us being close to the bottom like it did in the previous 2 cycles? Or do you think this is all all nonsense and this death cross means absolutely nothing and we're going to rip to all-time highs before the end of the year? Let me know down below. So with all that being said, that's all I got for this video. I'll see you in the next one. Frankie Candles out.